Every time you swipe your debit card, you're handing someone a direct line into the account where your income lands every single month. Not a credit line someone else extends to you, not a pending hold on a bank's balance sheet. Your actual money, the cash your Social Security check deposited, the funds your pension transferred, the balance your mortgage payment is scheduled to pull from in 9 days. When that account gets breached, the money does not pause while someone investigates. It leaves first. Every automatic payment, every utility bill, every insurance premium keeps moving on its own schedule, while your account sits at whatever number a criminal left it at. Most people hearing this carry one belief that makes them feel protected. My bank covers fraud. That belief is accurate as far as it goes. What it does not account for is the sequence. The money exits the moment the transaction posts. The protection process begins after. Between those two events, your financial life does not stand still. My name is Mason Parker. For over a decade, I have studied retirement benefits, senior tax programs, and the financial rules that affect seniors every year. What I am covering today is a specific structural risk that hits retirees harder than anyone else, and a specific arrangement that removes it permanently with one phone call. Before we get into it, I want to say something directly about why I cover topics like this one. The seniors who find this channel early use the information before a problem reaches them. The ones who find it late use it to recover from something that did not have to happen. If you want to be in the first group, subscribe right now and turn on the bell. That is what this channel is here for. Now, 3 assumptions that make this risk feel smaller than it actually is. All 3 are inaccurate, and all 3 are expensive to carry. Assumption 1. You check your account regularly, so you would spot fraud quickly. What you will spot is the damage already done. A card number captured by a skimmer 3 weeks ago can generate a $2,400 withdrawal at 3 o'clock in the morning on the exact date your mortgage is scheduled to clear. You discover it at 9 o'clock when your phone rings because the mortgage was returned. The money has been gone for 6 hours by then. Assumption 2. Bank fraud protection means you are made whole immediately. Your bank has a process. What your bank does not have is a legal obligation to restore your funds while that process runs. There is a specific federal law that governs exactly how long they can take, and most seniors have never read it. Assumption 3. This risk belongs to people who shop carelessly online. Over 243,000 debit cards were compromised by skimming in a single recent year. Skimming is, by definition, a physical attack at locations you visit in person and trust completely. Stay with me through this entire video because I'm going to show you the specific legal difference between the protection printed on your debit card by your bank and the protection that is actually written into federal law by Congress. Those are 2 completely different things, and the difference between them is what determines whether you are made whole or left waiting while your bills keep processing. The phone call that permanently fixes this is coming at the end. Here is something your bank has a structural reason never to tell you. Every debit card transaction generates revenue for your bank from the merchant. The volume of those transactions determines the size of that revenue. In 2026, Congress voted to roll back rules that would have capped overdraft fees at $5. Americans paid more than $12 billion in overdraft and returned payment fees in the prior year. The institutions collecting those fees profit directly from the same payment method they have no incentive to caution you about. The branch representative who has known you by name for years has no financial incentive to sit across the desk and explain that the card you use most frequently carries the weakest legal protections of any payment instrument in your wallet and the highest potential to instantly drain the account where your income lives. That conversation works against the bank's interest, so it does not happen. What the Electronic Funds Transfer Act actually says: when debit card fraud occurs, the money vacates your account the moment the transaction posts. That is not a bank policy. That is how the system works. After you report the fraud, federal law, specifically the Electronic Fund Transfer Act, gives your bank 10 business days to investigate your claim. Not 10 calendar days, business days. Weekends do not count. Federal holidays do not count. If the investigation requires more time, the window extends to 45 calendar days with one condition. The bank must provisionally restore your funds within the original 10 business day window, while the investigation continues into the extended period. But here's what most seniors never calculate when they hear those numbers. 10 business days is 2 full calendar weeks. If fraud hits on a Wednesday, provisional credit may not arrive until the following Wednesday at the earliest. And the bank has the full legal window available to them. Your mortgage, your utility bill, your prescription auto payment, and your supplemental insurance premium are not aware of any of this. They process on their own schedule. When the account balance is not there, they return. And each returned item generates a fee from your bank, and often a separate fee from the creditor. There's also a reporting window that most seniors do not know exists. Report fraud within 2 days of discovering it, and your liability under federal law is capped at $50. Wait beyond 60 days from when the fraudulent transaction appeared on your statement, and your liability expands to cover everything the criminal took. The 60-day clock starts from the date your statement was sent, not the date you opened it. What this actually looks like when it happens: a 67-year-old retiree receives her Social Security deposit on the 3rd of the month, total $2,711. She uses her debit card for groceries, fuel, and a handful of monthly subscriptions. On the night of the 4th, a criminal deploys her card number, captured weeks earlier by a skimmer at a gas station she visited routinely, and executes 4 transactions, totaling $1,620 at retail locations in another state. The transactions complete in minutes. She wakes on the 5th to an account balance of $451. She contacts the bank immediately and reports the fraud. An investigation opens. 10 business days. Her mortgage payment processes on the 10th. Returned. Her utility payment processes on the 12th. Returned. Her supplemental insurance premium processes on the 15th. Returned. Each returned item triggers a bank fee of $34 to $35. Each creditor adds its own returned payment charge. By the time the investigation closes and her funds are reinstated, she has absorbed more than $100 in bank fees, more than $75 in creditor charges, a returned payment notation in her insurance file, and nearly 2 weeks of individual phone calls to every creditor explaining a situation that was not her fault. The fraud was painful. The structural collapse that followed the fraud was what consumed her. Credit card versus debit card, the legal difference nobody explains. Here's the comparison your bank will not present to you directly. When fraud occurs on a debit card, the money vacates your account at the moment of the transaction. The protection process begins after. When fraud occurs on a credit card, the charge never contacts your money at all. It sits as a disputed item on a credit line that belongs to the issuer, not to your bank account. You owe nothing on it during the dispute. Every major card issuer reverses it immediately upon report. Your checking account is never involved. One payment method moves your money before anyone asks a question. The other never moves your money at all. That distinction is the entire conversation your bank is not having with you. Federal law versus your bank's voluntary promise. Most banks market a zero liability debit card policy. That policy sounds like the same protection a credit card provides. It is not. The Fair Credit Billing Act protection on a credit card is federal legislation enacted by Congress. It cannot be altered by any bank without an act of Congress. Your bank's zero liability debit card policy is a voluntary internal commitment that the institution created and maintains at its own discretion. Banks have modified, narrowed, and conditioned their voluntary zero liability policies before. They will do so again when fraud loss volumes reach levels that make revision financially attractive. The people depending on a voluntary bank policy for protection are one internal memo away from a materially different situation than they believe they were in. If you do not know what your bank is legally required to do when a fraud claim is filed on your account, or what the specific difference is between a federal protection and a voluntary bank policy, that gap is one transaction away from becoming expensive. The Senior Money Defense Playbook covers the bank account rules, the freeze prevention steps, and the trusted contact setup that protect your account before a problem starts. The link is in the description below, or scan the QR code on your screen right now to get your copy directly. The two-account system, income account and spending account. Now let me show you the arrangement that permanently walls off your retirement income from every gas pump, restaurant terminal, and online checkout in the country. It requires one phone call to put in place. It has been standard practice among financially sophisticated people for a long time, while most of the country was handed a debit card and wished good luck. The approach is called account separation. Two accounts, two distinct purposes. A hard barrier between the account where your income accumulates and any account that faces commercial transactions. Account 1, your income account. Every deposit that arrives with your name on it lands here. Social Security, pension distributions, investment income, retirement account withdrawals. Everything flows into this account and this account alone. No debit card attached to this account ever enters a merchant terminal. No card number from this account is ever stored at an online retailer. No gas pump, no restaurant card reader, no checkout system ever sees this card number in a transaction. This is where your money lives, and every automatic payment you have is anchored here. Your mortgage, your utilities, your insurance premiums, your Medicare supplement payment, your prescription autofills, everything that runs on a fixed schedule draws from this account. The card that belongs to this account stays in a drawer. It is available if you ever need it for something specific. It does not go into your wallet for daily use, and it does not enter any merchant system. Account 2, your spending account. This account carries its own separate debit card. You fund it periodically from your income account, $200 or $300 at a time, enough to cover your week's routine purchases, groceries, fuel, coffee. Whatever you buy in person on a regular basis runs through this card and this account. If a skimmer captures the spending account card number, the criminal gains access to whatever small balance remains in that account. $200 or less, not your monthly Social Security income, not the account your automatic payments draw from, not $2,711 in the middle of the night while you were asleep. The spending account card is the only card that goes into your wallet for daily use. The income account card stays home. Now, even better than the spending account debit card is replacing it with a credit card used the same way. Not to carry a balance, not to pay $1 of interest. You use it for every routine purchase and pay the full statement balance on the due date each month. Every transaction on that card is protected under the Fair Credit Billing Act, federal law, permanent, zero liability for fraud, immediate reversal upon report. And your income account, the one your mortgage servicer and utility company and insurance carrier all draw from automatically, never encounters a merchant system at any point in your daily life. If you prefer not to use a credit card, the two-account debit arrangement accomplishes the same separation. The principle is identical either way. Place a hard barrier between the account where your income accumulates and any account that faces the commercial world. The 4 situations where debit is the right tool. The objective here is not to eliminate debit cards entirely. It is to use them only where they serve you well. There are 4 specific situations where a debit card remains the correct instrument. Situation 1. ATM withdrawals at your own bank's machines. You are accessing your own cash directly, not transmitting your card number to a merchant terminal. Before inserting your card, spend 2 seconds examining the card slot. A legitimate reader is solidly integrated into the machine. If anything shifts or feels loose when you touch it, use a different machine or go inside. Shield your keypad with your hand when entering your PIN. Situation 2. Small local establishments that do not accept credit cards. Pay the minimum necessary for that transaction. Use your spending account card, not any card connected to your income account. Situation 3. Government agencies and utility providers that impose a credit card convenience fee of 2.5% to 3%. On a $200 payment, a 3% fee costs $6. If the same payment posts at no charge on a debit card, use the spending account card. Situation 4. Businesses offering a cash or debit discount. Same rule. Spending account card only, never the income account card. Those 4 situations and nothing else justify reaching for a debit card. Every other transaction belongs on the credit card or the spending account debit card. The one rule with no exceptions. One rule applies regardless of any other decision you make after today. and it carries no exceptions. Never use a debit card at a gas station pump. Walk inside and pay at the register, or use a credit card at the pump. Fuel pump scammers represent a disproportionate share of all debit card fraud documented by the FTC annually. The pumps stand unattended for extended periods. Modern skimming hardware has been miniaturized to the point where it installs inside the pump housing, completely invisible to any external inspection. You cannot see it, you cannot detect it, you cannot know it is there. A credit card at the pump costs you nothing additional and permanently removes the single highest risk skimming environment in your daily routine from your income accounts exposure. One habit change. Every gas station, every time. No exceptions. 4 security practices for every debit card you keep active. The 2-account system handles the structural risk. These 4 practices handle what remains after the structure is in place. All 4 take effect immediately. None of them cost anything. Practice 1. Real-time transactional alerts. Set up real-time transactional alerts on every account you hold, triggered on every single transaction the moment it posts. Not a daily summary, not a weekly digest. One notification the instant any charge hits, regardless of the amount. When a transaction you did not authorize appears, you know within seconds. Not days, not when your next statement arrives. Seconds. That timing is the difference between catching fraud on a $47 test charge before the criminal escalates and discovering $1,620 gone at 9 in the morning after 6 hours of damage. Call your bank today and confirm real-time alerts are active on your account. Ask specifically whether they are set to trigger on every transaction or only above a threshold amount. The default at many institutions is a minimum dollar amount, which means small test transactions go undetected. Ask for alerts on every transaction with no minimum. If real-time alerts are not currently active, ask them to enable it before you end the call. This single step turns your fraud discovery timeline from days to seconds. Practice 2. Daily spending limit reduction. Most institutions assign default daily debit spending limits of $500 to $1,000. That default exists for the bank's convenience, not for your protection. Request a reduction to $200 or $300 on your spending account card. This does not prevent larger planned purchases. Those can be authorized individually with a quick call to your bank before the transaction. What it does mean is that a criminal holding your card number cannot execute $900 in transactions across 3 states between midnight and sunrise. The window they have to damage you before the alerts fire and the card is frozen becomes significantly smaller. A $200 daily limit turns a potential overnight catastrophe into a manageable inconvenience. Practice 3. No stored card numbers at online retailers. Do not allow any online retailer to store your debit card number on file for future purchases. When a retailer stores your card information and their database is later breached, your debit card number is part of what the criminals collect. Your checking account is the breach. Most retailers offer the option to save your payment information for faster checkout. Decline it for any debit card. Enter the number manually for each transaction instead. Some banks also offer virtual card numbers, temporary card numbers generated for a single transaction that cannot be reused. Ask your bank whether this option is available on your account. If you currently have a debit card number stored at any online retailer, log into that account this week and remove it from the payment methods on file. Most retailers have a payment settings or wallet section in your account where stored cards can be deleted in under 2 minutes. Practice 4. Account review every 3 to 4 days. The 60-day reporting window under the Electronic Fund Transfer Act is not as generous as it sounds once you understand how the clock runs. The 60-day period begins from the date your statement was sent, not the date you opened it or noticed a problem. Discovering fraud in week 7 places you inside the zone where your personal liability under federal law has already expanded. The bank has no obligation to investigate a claim reported outside that window. 3 minutes every 3 to 4 days. Open your banking app and scan the most recent transactions. Look for anything you do not immediately recognize. An unfamiliar merchant name, an amount that does not match what you remember spending, a transaction in a location you are not in. Any of those triggers an immediate call the same day, not the same week. Fraudulent charges frequently begin with a small test transaction of a few dollars to confirm a card number is active before a larger transaction follows. Catching the small one stops the large one. Now, I want to take a moment here because you have stayed through the legal difference between a federal protection and a voluntary bank policy, through the scenario that shows exactly how the damage unfolds after fraud, and through the full two-account structure that prevents it from reaching your income at all. If you are still here, it is because you understand that this is not theoretical. It is a phone call and a few habits away from being handled. If you are not yet subscribed, do it right now and turn on the bell. This channel covers the bank account rules, the Social Security protections, the Medicare fixes, and the tax rules that affect senior income in plain language before they cost you. Hit subscribe and let us get into the exact phone call to set this up today. Here's exactly how the conversation goes, because I want to remove every reason to delay this past today. Call the customer service number on the back of your existing debit card, or visit your branch in person if you prefer a face-to-face conversation. Either works. Most banks complete this in the same call or the same visit in under 15 minutes. Say this: I want to open a second checking account linked to my existing one with its own separate debit card. That is the opening. From there, the bank handles the mechanics. Ask them to set up automatic periodic transfers from your primary account into the new spending account on a weekly or bi-weekly cycle, whatever amount covers your routine weekly purchases. Once the spending account is open, go through your automatic payments and confirm every single one draws from your primary income account, not the new spending account. Mortgage servicer, utility providers, insurance carriers, Medicare supplement premiums, prescription autofills, every recurring payment anchored to the income account. The spending account card is for daily purchases only, and nothing that runs on a schedule should pull from it. While you have the bank on the line, ask 3 additional things before you end the call. Request real-time transaction alerts on both accounts, triggered on every transaction with no minimum amount threshold. Request a daily spending limit reduction on the spending account card to $200 or $300. Request written confirmation of your exact liability for unauthorized transactions on each account. An email or a printed summary is sufficient. You want that documentation on file so you know exactly where you stand before any fraud occurs, not after. That is the complete setup. One call, roughly 15 minutes. From that point forward, the account where your Social Security deposit lands every month is permanently separated from every fuel pump terminal, every restaurant card reader, and every online checkout system in existence. A criminal who breaches the spending account fines $200 or less. A criminal who never reaches the income account fines nothing. Let me bring everything into one clear list. Every item on it is free. Every item is available today. And every item either eliminates a risk permanently or reduces it to something manageable before it has a chance to become a crisis. Today, before anything else, call the number on the back of your debit card and open a second checking account with its own separate card. Say, I want to open a second checking account linked to my existing one with its own separate debit card. Ask for automatic periodic transfers into the spending account. Request real-time transaction alerts on both accounts with no minimum amount threshold. Request a daily spending limit reduction to $200 or $300 on the spending account card. Ask for written confirmation of your fraud liability on each account. If you are going to a gas station today, go inside to pay at the register or use a credit card at the pump. Not next week, today. That one change removes the single highest risk skimming environment from your income account before you start the car. This week, review every automatic payment you have and confirm it draws from your income account, not the spending account. Mortgage, utilities, insurance, Medicare premiums, prescriptions, every recurring payment anchored to the account where your income lands. Log into every online retailer where you have a stored debit card number and remove it from their payment methods. Most retailers have a payment settings section in your account where stored cards can be deleted in under 2 minutes. Ongoing, review your account every 3 to 4 days. 3 minutes. Look for anything you do not immediately recognize. Small, unfamiliar charges often precede larger ones. Catching a $4 test transaction stops the 1,600 that follows. If a transaction you did not make appears, call the bank the same day, not the same week. The 60-day reporting window under the Electronic Fund Transfer Act starts from your statement date, not from when you notice the problem. Every day you wait inside that window is a day closer to where your protection narrows. Your debit card operates under different and weaker federal protections than your credit card. During a fraud investigation, your money can remain out of reach for up to 10 business days, while your automatic payments keep processing and fees accumulate. Your bank's zero liability debit policy is an internal document, not a federal statute, and it can be revised without notifying you. The two-account system requires one phone call and permanently removes your primary income account from the reach of any merchant terminal. 4 situations justify a debit card: your own bank's ATM, businesses that do not accept credit cards, government payments carrying a credit card convenience fee, and cash discount situations. Those 4 and nothing else. Every other transaction belongs on the credit card or the spending account debit card. Gas station pumps belong in their own category, never under any circumstances from any account. I want to speak directly to the seniors watching this who recognize the scenario from part 2, the mortgage that returned, the insurance notation, the 2 weeks of phone calls. If that scenario felt familiar, or if you realized while watching that your income account and your spending card are currently the same card, what I just described is one phone call away from being permanently fixed. But the debit card risk is one of 7 documented rules quietly working against senior finances in 2026. There is the joint account that legally hands your savings to a creditor the moment your child's name goes on it. The FDIC coverage gap most seniors have never checked. The trusted contact setup that prevents account freezes before they start. The provisional income formula that determines whether the IRS is taxing Social Security it was never supposed to tax. The Medicare surcharge running on income you stopped earning 2 years ago. And the Social Security earnings record error, quietly reducing your monthly check with no notification sent. I put all 7 together in the Senior Money Defense Playbook. Every rule explained plainly. Every government form named, every phone number listed, every action step written out so you know exactly what to do and exactly when to do it. If even one chapter puts 1 month of a missed correction back in your account or prevents one fraud scenario from reaching your income, the guide has paid for itself many times over. The link is in the description below and in the channel bio, or scan the QR code on your screen right now to get your copy directly. It is called the Senior Money Defense Playbook. Subscribe and turn on the notification bell. Share this with one person in your household who still runs their monthly income and their daily spending through the same card. That one conversation might spare them 2 weeks of calls to creditors over fraud that began with one card swipe at one gas pump. I will see you in the next one.